Welcome back. You're watching Enterprise Inc. and this week we've decided to cross the line from looking at life from the entrepreneur's perspective to looking at life from the investor's perspective, specifically the private equity investor's perspective. This week Enterprise Inc. comes to you from the location of the Private Equity International India Forum.
Indian business, whether big or small, is all about family-owned, closely held companies.
The most important challenge is the mindset of the entrepreneur, the promoter.
Corporate governance isn't quite as strong as in developed markets.
There is enough money in the marketplace looking for good deals. So what you need is good quality deals.
And even if you get in, getting out isn't easy.
Regulation continues to be a challenge faced by GPs. The exits are an issue.
I think the biggest challenge today is valuation.
Classic private equity investing is all about buyouts. But in India, private equity is all about buy-ins.
The PE model in India that works is a buy-in model rather than a buy-out structure.
Buy-ins, buyouts, what does it matter? Or does it? Debating that on Enterprise Inc. this week, Sameer Sen of Future Private Equity and Saurabh Srivastava of IVCA. A former Goldman Sachs International MD, Sameer runs the Future Group's financial business, including its private equity arm Future Private Equity, that advises the $500 million IndiVision India Partners Fund. Saurabh has a varied and illustrious career in IT and investing, is co-founder of NASSCOM and currently heads the Indian Venture Capital Association.
Sameer, Saurabh, thank you very much for joining us on Enterprise Inc. I'm a little curious. Why is there so much confusion about what constitutes a buyout? I thought a buyout was a private equity firm or a venture capital or any investor who has enough money coming in and buying out the entrepreneur altogether. Isn't that correct, Sameer?
That's the definition of a buyout. That buyouts are a subset of controlling companies or taking a controlling stake in a company. There's also the concept of a buy-in, where I actually put money into the company and dilute the existing entrepreneur or family and therefore effectively take control. So buyouts are a subset of control transactions. I think for some reason we tend to think buyout is the only model for controlling a business. It's a very Western concept. There are many ways to gain control of a company without necessarily having to buy out somebody. You can partner and work with that person as well by investing money in that company.
Sir?
No, I think buyouts are a perfectly legitimate way for a private equity firm to come in, look at a company that's not running well. It's not running well because existing management isn't good. So you would want to have a controlling interest. You would want to make an impact to change the way the company is run and create value. It could be complete. You could leave some upside with entrepreneurs if you want their goodwill, if you want them to keep supporting things. Okay. But you don't want them to be in control. You want to manage cash flows. Okay. You want to manage future direction. So a buyout can be 100%, or you may leave some in. And the other problem with buyouts is, abroad you may have this question of a management buyout.
Right.
Right? But their managers actually put a plan together, they put some money together, then they go invite a private equity company to help them buy it out. Over here, professional managers mostly don't have that. So it would have to be a private equity company that comes, does a transaction, and then says, okay, well, why don't I give you guys some equity? Right. Which is a very different scenario.
So is family owned the only problem with trying to execute buyouts in this country? Because I know in the conference that you all were just discussing on a panel, family owned was one issue, exits was the other, the lack of professional talent to be able to manage a company once you've bought it out, because you're in a sense replacing the entrepreneur and his team, whether GPs themselves have the ability to run large companies or medium-sized companies even. Are all of these issues or challenges in your mind, or do you think that we're focusing too much on the concept of buyouts? It's not relevant in India.
In India, execution of any business is difficult relative to other countries. So a promoter in India has a style of executing business in an Indian environment. An Indian promoter is actually a very talented individual because he or she is able to execute in what is perhaps one of the most complex execution environments. Right. Now, when a private equity fund comes in and takes control of a company, we are professional, process-driven, discipline-driven, systems-driven people. We cannot replace an entrepreneur.
Right.
And so execution becomes a problem. So in our case specifically, we will only do a buyout or a control transaction where we are confident, given our large operations team that we have with our private equity team, we can actually go in and stabilize and control the situations, which is why most buyouts for us, at least in my view, which are effective, are ones where the company is in trouble. And you're actually buying out the entrepreneur and then turning around the business by putting in disciplined processes and systems. Otherwise, you have to learn how to partner with an Indian entrepreneur and create long-term value with an Indian entrepreneur.
So buy in, not buy out.
Buy in, work with the entrepreneur, don't be obsessed about control. If you back the right entrepreneur, surround him or her with strong execution capabilities and grow that business over a 3 to 5 year period. I think that probably is the best way to make money in this country.
Saurabh, do you agree with that? Samir says
I
don't
agree.
get too obsessed with control.
No, I think I
mean, isn't
agree.
that the most important thing for a private equity investor, especially in an Indian investing environment
I think the two
where there are
things.
so many intangibles out of your control?
No, I think it's okay to be obsessed with control in companies which are not well managed, because otherwise you're not going to be able to change it. So you must, to my mind, if you don't have control, you are not going to be able to influence the right practices
What is
in
not
it.
well managed,
Well,
right?
let me-
Because if you're
Sure.
unable to scale, you've taken it from stage 1 to stage 1.5, but you can't make that leap to stage 3. I mean, that's not well
So
managed.
I would
right?
say, to me, well managed means what? Poor corporate governance? That's not well managed. So if I'm going to get in as an
That's
investor,
an affliction across all
I'm
Indian
an
industries.
investor-
So how are you going to solve that?
yeah. If you don't have control, you can't solve it. Let's
Well,
be
look, I
clear.
think you can break
Okay.
it down into two parts, right? There are good businesses that you're investing money into to work with the entrepreneur to scale them and take them to the next level, and you believe in that entrepreneur and you want to back that entrepreneur. That's strategy A. Strategy, and there you don't want control, you want significant influence. Because what happens sometimes is you don't want to sit there and tell the entrepreneur what to do,
Right.
but you want the entrepreneur to treat you like a partner. You want to have the guardrails aside. You want to ensure that something doesn't happen where the entrepreneur goes completely off track. I mean, you're back to food business. What you want to ensure is the person doesn't wake up one day and say, I'm going to put up a power plant.
Right.
Happens in India all the time, by the way.
Right.
The other aspect is where you meet a business which is just in bad shape. As you said, where corporate governance or operating problems, financial mismanagement.
Second case is very infrequent in India for a
Happening
variety of
more
the
and
reasons
more.
that you touched
Happening
upon,
more
but
and more.
happening more and more.
But they tend to be more businesses that are very unhealthy and require disciplined process systems, or where there's another example, 3 founders, second generation kids don't get along. They're fighting. They've decided to exit
Sounds
the
like a
business and
classic
go their
family
separate
business
ways.
problem, yeah.
And by the way, in the third, as I say, it takes one generation to build the wealth.
Yes.
The second generation to scale it up, and the third
Don't
generation to
destroy
squander
it.
it.
Yeah, absolutely.
So typically you find third generation businesses will come and want to separate and want you to come and
So
take
I
control.
understand that all styles of investing coexist and that not any one is necessarily always better than the other. The question I'm trying to wrap this up on is that the fact that we have very few buyouts in India, is that a negative? Does that reflect poorly on the private, or does that mean that we don't have the best kind of private equity investing environment in this country? Or is that just a
I don't think
matter
it's
of
negative.
evolution? It will take us time to get
I
there.
think it's a function of market maturity.
That's it.
I think that there are great Indian entrepreneurs. I think that you need an Indian entrepreneur. You need to partner with an Indian entrepreneur. I think buyouts are generally a more mature market philosophy.
Okay.
And especially leverage buyouts where they're typically
Right.
mature businesses chucking a lot of cash flow.
Right.
But I don't think it's a negative. I just think you got to know how to deal with the environment. I think you got to know how to cope. If you're a minority investor, how are you going to ensure that you protect your capital and make sure that the entrepreneur delivers what the entrepreneur has said they will?
Okay, sort of one, interesting stumbling block to being able to create buyout environments in this country is the lack of a suitable exit option. If you try to go IPO with a company you bought out and you're the private equity investor who owns bulk of the company or all of it, you then become the promoter, and promoters in IPOs in India under have lock-ins and all kinds of other restrictions on them. It's not the best way to do this. So do you think we're many, many years away from creating the right kind of regulatory investment environment for buyouts in this country, and that till we don't go there, we don't really need to get into a flap about the fact that we don't have the best buyout environment?
I think we're some distance away, because you do need a regulatory environment which facilitates, or at least doesn't make it difficult to do
Right.
buyouts.
Right.
Today that environment is very difficult.
Both for private and public. Public,
Yes.
it's impossible because delisting doesn't,
Well,
allow.
forget
It's not
delisting.
easy to do.
Forget delisting. In general, the way private equity would hedge when it does buyouts is leverage with debt.
Right.
You can't do that
At all in
You
India,
can't
yeah.
borrow from Indian banks. There are issues on what you can do on ECBs. You become a promoter, you don't have an exit. Whichever way you look at it, it's very hard.
Right.
Plus, you'll mostly have a minority position. It's hard to get a majority control.
Right.
If you're a minority, you don't have control on cash flows. It's not a great environment. And just like Samir said, the reality is that except in a few industries, which are largely first generation entrepreneur-led, in most other industries, the entrepreneurs don't actually want
To let go
buyouts
of
to
the
happen.
business, yes.
So therefore, there isn't a big driver for government regulation to improve for buyouts, because the bulk of industry actually isn't particularly interested. Until that happens, I don't see that environment changing. So I would say buyouts in real terms in India are some distance away.
I think part of the problem is that we use Western concepts to box ourselves in,
Right.
in a country where I think that we are defining a very different style of investing, which is the minority, value-added private equity investor working with an entrepreneur to create the business of tomorrow.
And I think there I agree entirely, because I think if you look at the necessity to do buyouts, there's so much available by way of what you can do on deals, on growth businesses in India, in such a rapidly growing market,
Right.
that there's enough opportunities even if you don't have
Without
buyouts.
getting obsessed with
right?
the whole issue
And
of
what
buyouts.
surprises me always is that there is so little appetite for venture in India, whereas the biggest single opportunity in India, I think, is not private equity buyouts,
Right.
but venture.
All right, to all you entrepreneurs out there in our audience, we hope you enjoyed looking at life from the investor's point of view. That's all we have for you on this edition of Enterprising. Thanks very much for watching. We'll be back next week.